Do you know how your FICO score affects your mortgage approval and interest rates? Well, let's dive in. Your FICO score is a critical barometer of your credit risk, derived from your credit history. It's calculated using a blend of 5 key factors. First up, we have payment history, which accounts for 35% of the score. This factor considers whether you've been punctual with your payments on credit accounts, including credit cards, loans, and mortgages. Next, we have amounts owed, making up 30% of the score. It takes into account the total amount you owe, the types of accounts with balances, and how much of your available credit you're using. Coming in at 15% is the length of your credit history, which includes how long you've had credit accounts and the last time you used them. New credit and credit mix each contribute 10%. Opening several new accounts in a quick span can negatively affect your score, as can a limited variety of credit types. In conclusion, your FICO score is a crucial determinant of your creditworthiness, and lenders use it to assess your risk level. Let's delve into how your FICO score can impact your mortgage application. Imagine you've got a solid FICO score of 750, and you're applying for a mortgage of $750,000. With no additional debt, your good credit history makes you a likely candidate for competitive interest rates and favorable mortgage terms. But what if you were to take on an additional $15,000 of debt after your FICO score has been established? This increase in your credit utilization ratio might tip the scales and cause your FICO score to dip, perhaps down to 680. Lenders, seeing this higher debt load, might perceive you as a greater risk. This could result in less favorable terms on your mortgage offer, or possibly even affect your mortgage approval altogether. Maintaining a high FICO score is crucial when applying for significant loans like mortgages. It can substantially affect the interest rates offered and the overall cost of borrowing. Navigating the world of FICO scores and mortgages can be complex, but you don't have to do it alone. Credit scores and home loans may seem like a daunting duo, but when you break it down, it becomes easier to understand. And once you get the hang of it, you'll realize that a high FICO score is your ticket to competitive mortgage rates and attractive loan terms. It's like having a golden key that opens the door to your dream home. But what if you're not there yet? What if your FICO score isn't as high as you'd like it to be? Or what if you're just starting to build your credit history? Don't worry, it's never too late to start improving your credit score. And every step you take towards a higher FICO score is a step closer to homeownership. Remember, your FICO score is a reflection of your credit behavior. It's based on 5 key factors: your payment history, the amounts you owe, the length of your credit history, your new credit, and your credit mix. Each of these factors weighs differently on your score. So, if you can manage these 5 aspects wisely, you're on your way to a higher FICO score. Let's take a closer look at these factors. Your payment history accounts for 35% of your score. That's a significant chunk. It means that making payments on time for your credit accounts, including credit cards, loans, and mortgages, can significantly boost your FICO score. So try to avoid late payments as much as you can. The amounts you owe make up 30% of your score. This considers the total amount owed on all your accounts, the types of accounts with balances, and the proportion of credit used compared to your available credit limit. If you're using a large portion of your available credit, it could indicate that you're overextended and may have difficulty meeting your payment obligations. The length of your credit history contributes 15% to your FICO score. This factor considers how long you've had credit accounts open and the time since those accounts were used. The longer your credit history, the better it is for your FICO score. But don't worry if you're new to credit. There are ways to build your credit history. New credit and credit mix each account for 10% of your score. Opening several new accounts in a short period can negatively impact your FICO score. But having a mix of different types of credit, like credit cards, retail accounts, and mortgages, can actually be beneficial. Now, let's talk about mortgages. For a mortgage of $750,000, your FICO score plays a critical role. Let's consider a scenario where you have a FICO score of 750 and no additional debt. With this FICO score, you're likely to qualify for competitive interest rates and mortgage terms. However, if you were to add $15,000 worth of debt after obtaining your FICO score, it might decrease due to the increased debt burden. This could affect your mortgage approval and the interest rate you're offered. Lenders might view you as a higher risk due to the increased debt load, potentially resulting in a less favorable mortgage offer or even affecting your mortgage approval. So, how can you improve your FICO score? Start by making payments on time, reducing your debt, and using credit wisely. It's also a good idea to check your credit report regularly for errors that could be hurting your score. And remember, improving your FICO score takes time, so start today and keep working at it. If all this information seems overwhelming, don't worry, I'm here to help. Whether you're a first-time homebuyer or a seasoned homeowner looking to refinance, I can guide you through the complexities of FICO scores and mortgages. I can help you understand how your FICO score impacts your mortgage options and what you can do to improve your score. I can also help you navigate the mortgage application process and answer any questions you may have. My goal is to make the process as smooth and stress-free as possible for you. So if you're feeling lost or confused, don't hesitate to reach out. Remember, you don't have to navigate the world of FICO scores and mortgages alone. I'm here to help. For further information, reach out to me at 862-371-6037 or email me at jestramera.realtor@gmail.com. I look forward to helping you unlock the door to your dream home.